All right. Hello out there in internet world. This is Michelle Hayward coming to you again with another episode of Real Talk about Real Estate. A real estate broker and property manager here in the Metro Atlanta area. I have my own brokerage, which is Premier Realty and Property Management, and I'm also an associate broker with EXP Realty. So today I have a very special guest. I have a mortgage loan originator. She's been in the business for a very long time. Her name is Miss Nicole Rada from the Mortgage Calculator. And she's going to be giving us some great information today. So please get your pen and your paper out so you can take some notes and learn something today. So how you doing, Nicole?
Hi, Miss Michelle. How are you today?
I'm doing great. I'm glad you took the time out to join us today on today's recording. And so if you would, please just tell us a little bit about your background and experience in the mortgage industry.
Okay, sounds great. Thanks for having me on. I have done mortgages. I've been involved in all the different aspects of mortgages and real estate. My first loans were done by paper when we actually sat across from people and had, I know I'm dating myself. I've been involved in thousands of transactions. I don't know that you could probably tell me a situation that I've never seen or heard before, but
okay.
I want you to tell me a good story that I haven't. I understand how the market works and how
Form 1003, that long form application.
Right. Many pages.
Not to give our ages away.
I know.
Okay. Wonderful. So you've seen a great deal of changes then in the industry as you've worked over time. And needless to say, regardless of what went on, people still bought and sold real estate, even when it was in mortgage rates were in the double digits. Yeah, I remember that time.
Exactly. I remember that time. I remember thinking, what? Okay, fine.
Can you tell us about some of the loan products that you offer at the Mortgage Calculator?
Sure. Absolutely. We are a nationwide lender. We're not a mom and pop. So we, of course, do conventional. We do the first time buyers. We do the FHA. We do all those basic loans. But we have a specialty niche for investors. A lot of investors either don't want to show their income or just go off the cash flow of the property for whatever reason. And so we have a specialty niche there. We have other loan programs that if you are a crypto person and you just get crypto, if you sell cannabis, we have those. We have a 2 to 8 unit mixed use that's not commercial. So we really specialize in that. But we're not forgetting our first time home buyers by any means. We love them dearly. So we have that. If you tell us a situation.
What are the Oh, I'm sorry. Go ahead.
No, please go ahead.
I was going to say, what are for those products you mentioned with crypto income and self-employed, what are the minimum credit score requirements for products like that?
So I've seen them down to 599, 600. But if you're in an LLC, we do a lot of LLCs. We do LLCs all across the nation. I know. We do people who are foreign nationals, as you were just mentioning, bank statements.
Wow.
If you're self-employed and see in the tax world, you take any obvious expenses that you can. We're allowed to do that. But that means that on paper, we don't show a certain amount. We understand that being self-employed. So if you can show a certain amount of income in your business or personal bank statements, we can use that. Mm-hmm. If you're a high worth net individual and you have a certain amount of money, we can use that instead. So these are specialty programs. Yeah.
Awesome. And then you mentioned you have a portfolio product earlier. when we spoke. So talk a little bit about that as well.
Sure. So portfolios, as a general rule, have had some bad press, that there's a lot of terms that people don't care to deal with. Our portfolio, we have two or three different lenders that they are better terms. As you might have known, when the properties are small value, you can't get a regular loan on a $50,000 property, obviously.
Right.
So you package them together. But our portfolio lenders have much better terms, much more reasonable terms, because we do business with investors with 20 properties, with 10 properties, 5 properties. So we want to treat them well all the way through, whatever transaction they're doing with us, because they come back to us over and over again.
Yeah,
stay in touch.
I can imagine. That's an awesome thing
Absolutely.
to have. Okay, perfect. So let me ask you this. How do you think the rising interest rates, because it seems like the media is making a really big deal about these rising rates.
Right.
How do you think this will affect the real estate market and people, as far as people's purchasing power?
Sure, absolutely. So, as you know, with this crazy pandemic, the interest rates were suppressed to stimulate the economy. I read somewhere an interesting fact that one refinance puts about $70,000 back into the economy, because there's 2 of us right here, but there are about 13 different people in a standard transaction that have to touch the file, and everyone has some sort of salary or income for that. So that's interesting.
Wow. Yes,
last year, didn't we do something like $3 trillion in refinances?
Like that. Yes,
but those rates were artificially suppressed. I don't know if people actually realize that, to stimulate the economy in that crazy pandemic time. Crazy pandemic time.
Yes.
We are still expecting, I know, about a third less in transactions. So let's say $2.5 trillion this year. But what has happened because of that artificial suppressing of the interest rates is we've had unbelievable inflation. So that's what we're seeing now. People say, oh, your rates are high. Compared to what? Compared to artificial suppression for 2.5 years?
Exactly.
Right. Or are they just normalizing, which is true, because we have only had interest rates less than 4% 3 times in the last 20 years. And those were all in the last few years. So interest rates, yes, they're much more than they were a year ago, but now they're just getting back to normal.
Okay, I see. Now, I've had I mentor agents as well, and one of the agents that I mentor, one of her clients had I think it was a FHA loan, and her lender actually told her that they were expecting rates to get to probably as high as 8% by the end of this year. What are your thoughts on that?
Well, the Fed has already told us, and we've seen many rate increases in the last 6 to 8 months, definitely, because our inflation is so out of hand at the moment. They're trying to combat that. So that's why you're seeing the interest rates creeping up. But we were just talking about this before we started recording, is that nationwide, it's been about a 21.5% price appreciation. That's what they're trying to combat. They're trying to slow it down a little bit. We are not in a housing bubble because supply and demand is so far apart from each other. We cannot keep up with all the demand that we have for housing.
Yes.
They just can't get enough properties built. People aren't selling as much. I read that we have 3 to 5 years more for that to balance.
Wow. Okay.
That's unbelievable.
So it's still going to be very much a seller's market, you think, for the next 3 to 5 years at least.
The builders are trying to churn them out as fast as they can, but you know how that is. Anytime you deal with permits, you know all that firsthand. Permits, all of that. Just hurry up and wait.
Logistics issues going on and things like that on the building side, and the rise in cost on materials as well. Is affecting the new construction arena. Speaking of, do you all have a new construction product for investors?
Yes, we have ground up, where you want to actually build. We have fix and flip. That's another interesting one for investors. It could be a fix and flip or fix and hold.
Okay.
And when we first get started and give you a rate sheet, we just need basic information, what you think your credit score is. We need the particulars of the transaction, what is it, purchase price, what are your costs, and then we'll get you out a rate sheet, and then we move on from there. So you don't need to get started with, 100,000 different pieces of paper just to get it going. We call it a pencil. We pencil you a quote.
Okay. So back to the new construction. I'm asking this for a particular reason. With the new construction for investors, do you require that they have completed at least one new construction project within a certain amount of time?
Right. So on certain transactions, they're going to look for experience. They're going to see that in the last 3 years, you've done a certain number of transactions. But here's an interesting workaround, is that you can partner with someone who has experience.
Right. Okay.
On our fix and flip, we have one program that you can get the draw right away within 3 business days.
Oh, wow.
Just taking a picture of the property. It has a geo tag on it, so it knows that you're at the property, and they will finance the first year of payments.
Wow.
I know, it just blows the mind, doesn't it?
Amazing. That is amazing. I'm definitely going to be sending more people your way, Nicole,
but they don't want someone who hasn't done that sort of thing before.
Okay, so they do want experience, maybe like 1 to 2 flips in the last 12 months or something like that. Okay.
And so we're not trying to cut anyone out. Sometimes they'll just take the loan to value, which is the loan amount versus the overall. They'll take that down a little bit. I call this putting together the pieces of the puzzle. You give me certain information, and then I try and put the little details together to find the best option. But being the lender, we're always going to do better price-wise and all the detail-wise, because we are the ultimate lender and we underwrite it.
Okay, awesome. So you lend in-house, you fund in-house.
Yes.
Okay.
We do have a few that we have to broker out, but I would say about 80% of them are done. We are a delegated lender.
All right, perfect. Yeah. Now tell me a little bit about this 40-year interest only.
I know.
That's very attractive.
We just took one investor out of a portfolio he bought years ago when properties were minuscule. I think we put $1.5 million into his pocket. He wasn't crazy about his portfolio anymore, but his properties had gone up so much that was possible. And each one, he wanted interest only because he wanted his cash flows, which as an investor, isn't it really just about cash flow?
It is. Yes. Right? Otherwise, what is the purpose? You are
right. Exactly.
So I want to touch a little bit on back to the owner-occupied loan products you have. I want to touch on this issue I'm seeing with FHA.
FHA.
I'm noticing it has been such a challenge. It's been a while since I actually worked with an FHA buyer, but I just had one referred to me recently. And when I tell you, like, just about every condo or townhome community, even single family homes, a lot of these people do not want to accept FHA. And I know on the realtor side of things, a lot of times people are worried about the appraisal. You know, FHA may come back with lower than, say, what a conventional appraisal would come back as. So what is your take on that? And do you think FHA will, do you think FHA will do anything to kind of tweak how they operate to help people who are only eligible for FHA financing?
Right. FHA is a very good program. Now, if I had the option between conventional and FHA, I would go conventional all day long. Yeah. But if now there's a misconception about FHA. They're putting down, a less amount, and they do look at the condition of the property. So that's what you were saying about the appraisal. If there's anything major, and I have a list here, of course, it has to be livable. There are certain standards that they could bring that up. So that's why people are afraid of FHA. But it is a very good loan. Now, I think we were talking about warrantable condos.
Yes.
Since 2019, They have tried to open that up a little bit. Warrantable condos means that they want to have a certain number of owner occupants.
I see.
Right. They have opened it up a little bit, and a lot of people don't realize that you can get a single unit approval, or we call it a spot approval, that can go through the process and be approved, but it has to be what we call manual underwritten, and someone has to put eyes on it.
Oh, I see. So basically what you're saying is, and this is just for people who may not understand, just to clarify, if somebody is interested in a condo or townhouse where the community is not FHA approved,
right,
you can possibly get that one townhome or one unit that they're interested in approved and financed.
Exactly.
Anyway. Okay.
Exactly. You might not have the same low down payment though.
A higher down payment?
Yeah.
Okay.
So that sort of negates the whole idea of the right. That
makes sense. Okay. Okay. All right. Well, that is some very helpful information to know. And you said they've loosened some of their restrictions already.
2019.
They're probably seeing the same issue then.
Exactly.
That's what led to the change. So we'll see how that continues to manifest or develop, and see if any improvements come from that, because I know a lot of people have been knocked out of the box, buying box, because of the restrictions or what have you. You said there was a link that people could use to check whether a community is FHA approved or not. What I'm going to do is just post it up at the end, towards the end of the video, where people can actually go in and see whether a community is FHA approved or not, before they actually start their home search. So that's awesome. All right. So you had mentioned something about crypto. Can you touch on that? Because crypto is here to stay. I'm that it's not going anywhere. And I have people that work for banks that I know who are saying that basically banks are getting ready to make it where people can make deposits from the crypto directly into their bank accounts and things like that, because they want to bring money that's going out of the bank back into the bank. So anyhow, can you touch on what's going on in the mortgage world with that, with crypto?
Yes, so crypto, one of my colleagues just did a crypto loan, and you have to be able to document the crypto, of course, and some sort of bank statement showing it. But these are called non-QM loans, non-qualifying mortgages. So that's what I was saying about the pieces of the puzzle. With that one, we have a couple different lenders, not a lot, but we do have 2 out of our, I would say 30, that will accept that. And they will just verify it, that it is there. And we can move. He did a purchase in Miami, a beautiful home, condo in Miami on the water.
Nice.
Right.
And he did it all with cryptocurrency.
Cryptocurrency.
Wow.
So we think outside of the box a little bit.
Yes. So just to wrap our heads around it, I know it's much more complicated than probably what I'm saying, but is it kind of like the lender made the loan? They purchased the home with the cryptocurrency.
Yeah, he had to transfer, of course, a certain amount at closing to a certain down payment, right? But he was approved based on only his cryptocurrency.
Wow, that is awesome.
Right.
Okay. Times are really changing so fast.
Times are changing, exactly.
So how do you think that would change the lending world? What kind of effect do you think that will have? You think it'll open up the market more and allow buyers who possibly couldn't have purchased before?
Yes, absolutely. Absolutely. Like with our investors who only care about cash flow, we've got options for so many different avenues that the banks are always going to be conservative. The banks are lending their depositors money, so they are conservative. of course. And things are much more conservative since 2008, which you probably know in the overall banking world. But by being able to qualify self-employed people who take every expense that they're entitled to, I do it myself.
Yes.
We can do bank statements. We can even do a 1099 program only. We are in that space. We call it the non-QM space. We are much more able to help people. Absolutely. But the banks, they're always going to be stricter, and they want to see every single little penny for 2 years back, 3 years forward.
Blood and,
right, exactly. Where were you for 2 months there? Oh, jeez.
Okay, so one more question I had for you, and then I guess that'll wrap it up.
Okay.
I was watching CNBC today, and they were saying how at the Fed meeting they were talking about basically selling the mortgage-backed securities that they're holding. So they're essentially basically getting out of the mortgage bonds. And so just curious to know, how do you think that will affect lending around the world?
Yeah, I think our rates are on the increase. I think we have another 4, they're saying another 4 different increases, but they were so involved for the last 2 years to suppress those rates.
Okay.
So I think this is inflation is at its all-time, the last month, Miss Michelle, inflation went up the largest amount that it has in 40 years.
And I feel it. Like, everybody feels it. You just go into the grocery store and it's like,
what?
Man, $10 for like a carton and a half of eggs. And it's like, what?
That wasn't that way before.
It's crazy. So it'll be interesting to see. It's definitely been a wild ride these last couple of years. But it's nice to have lenders who are flexible in the way they do business. So absolutely, Nicole, if you would just give your contact information, how people can reach you, and thank you for joining us.
Yes, absolutely. So overall, even if the rates go up 1%, 0.5%, with the price on price appreciation, we still have a benefit to buying now. People shouldn't be trying. I don't know that we're ever going to get back to those pandemic rates. I really, that was a gift. Thank you very much. We had to have a global pandemic to get that gift, unfortunately.
Right, exactly.
And all the problems that we had with that. But overall, if your property goes up, let's say it even goes up 10%, because they're saying that 2022 is going to be the highest purchase year in the history.
I believe that.
Yeah. So people are still buying. We can't think about the pandemic rates. And next year, if the prices have gone up, let's say they even go up 10%.
Okay.
You won't have as much purchasing power if you wait till next year to try and get the rates down. They're not going to pandemic rates. They're not.
Yeah. But now is definitely the time to buy. If you're going to buy, if you're able. You've been sitting on the fence, get off the fence and get in the pool. Go ahead and.
I think I was telling you about,
because now is the time. I can't.
I think I was telling you about my neighborhood. I bought a nice little home. Needs a little work. I got it for $190. 6 months later, my next door neighbor is selling for $230, and on the corner, it was nicely fixed up on the corner. It was beautiful. They got $290. 200 square feet bigger.
Okay, well, still, that's not even that much of a difference.
I know.
Wonderful.
I know.
So you moved into instant equity, basically. Yeah. And that's what kind of market we have here. That is what kind of market we have. It is. You are there in Texas, aren't you?
I'm in San Antonio.
Oh.
But we are a nationwide lender. And a lot of our investors purchase or refinance through an LLC, that means that we can be anywhere. But we're licensed in all the different states.
Okay. Too. And then you also do international, did I understand that right?
Yes.
International buyers?
Yes, we do a lot of foreign nationals.
Okay.
And
what are the requirements for that?
Interesting thing about that, Miss Michelle, is that they just need a CPA letter. We actually don't want them to
Wow.
have credit in the United States because they're not residents here, right?
Okay.
They will check.
Okay.
And we have a lot of foreign nationals. Even if you have an I-10, also, we have programs for that. People are buying. They're not concerned about what we call this a rising rate environment. I just call it a different environment. It's a normal environment. You and I both know we've seen rates all over the place, haven't we?
Yes, and the double digits. I remember those days before Clinton.
Exactly. And then all you have to have is a good mortgage person who stays in touch, and you just refinance maybe in a year or two, because we stay in touch. That's important. And communication.
That's key what you just said. Most people don't keep that same loan for the life of the loan.
Exactly.
You know? So the biggest issue is don't focus so much on that part of it. You know, it will affect the payment though. That's where it's not going to go out the box, you know. But with the pandemic, a lot of people started working from home, and they're getting, it's been a lot of new millionaires coming into the marketplace as well.
Absolutely.
So,
yeah, we have different ways of staying in touch with clients. We have something that you can get a monthly mailer, and it gives you a digest of all the different activity in your neighborhood. I was going to talk to you about that. You just want to have a good mortgage person who stays in touch.
Yes, absolutely. All right, awesome. So what's the best way that a person can reach you, Nicole, to get more information to see what they would qualify for?
Sure. You're welcome to give me a call. My number is 210-294-0771.
Wonderful. All right. Well, that wraps up our second episode of Real Talk About Real Estate. We've enjoyed having Miss Nicole Rada from the Mortgage Calculator here to give us some great information about the different options you have now to purchase. If you're a portfolio owner, you know, we offer property management services at Premier Realty and Property Management Services. Talk to Nicole, see what you can do. Maybe you can pull some cash out and buy some more property, increase your portfolio at this period of time. Because I know in Atlanta, rents are way up.
Crazy,
so it's a gold mine. People are paying $3,500 to $4,000 a month with no problem. So yes, absolutely. So yes, definitely give Nicole a call. Thank you, Nicole, for taking the time to do this interview with us today. And look, we hope to have you back soon to talk about any other changes within the mortgage marketplace.
Sounds good. Thank you, Miss Michelle. I hope you have a lovely day.